All right, guys, we're actually going to talk about POI selection, also known as point of interest selection. So generally the first thing that I do whenever I'm looking at any kind of chart, doesn't matter which chart, doesn't matter the asset, doesn't matter the time frame, I generally will pop up to a higher time frame and see what's going on, and then I'll work my way down to see what's nearby current price. So before I even bother with market structure, I still want to see where are zones that we could either reject or bounce from, and then we can layer on the other stuff once we come to these areas, right? You don't necessarily have to do this. You can trade all these concepts wherever price is if you're a scalper, by all means. But if you want these higher probability plays and the plays that are going to get you these larger moves, you're going to want to do this, right? You're going to want to identify these different levels of fractal, these different pivot demand and pivot supply, these various range-bound supply and demand zones. You want to know where they are relative to current price, right? You don't want to be guessing in the moment. You want to have this way ahead of time. So this is what I do. So let's pretend this is where we start the day off. So the first thing that I'm looking at here is, okay, here's the low. I'll mark this in. I'll even draw a trend line over usually. I'll go, okay, here's my low and here's the high. Okay, so I want to draw the low over somewhere to the left here where it's meeting a price zone over here so that if I go back, I can find it easily. And I'm actually going to draw this horizontal ray over on the top line here. I'm going to connect it to where we are over here as well. I'll put them in different colors in black so I can actually see these very well. I'll use red. I'll use green for demand zones. Obviously, we're not looking for supply zones under us. We're looking for demand zones because that's kind of silly, right? We're looking for supply zones above us. We're not looking for demand zones above us because, again, that's kind of silly, right? We're not going to be silly. We're going to take this quite seriously. So let's go ahead and do just that. So first things first, I'm going to go to the daily. I'm going to say, okay, do I have any demand or supply zones that are absolutely nearby me on the daily time frame? Well, let's find out. So based on my daily market structure, even though I said I wasn't going to really bother with structure, I still need to, in some regard, to figure out if it's even a valid supply zone because I see this up candle right here. So how are supply and demand zones created? Well, you have either buy to sells or sell to buys. So for a supply zone, you need to have a buy to sell, and it needs to break structure. Otherwise, it's an unconfirmed supply or demand zone, which can work, but they are very, very risky, and I don't care for risky right now. I want higher confluence stuff. If I was going to go with the riskier setups, I may as well not even draw in any point of interest at all and just scalp where we are in the moment based on structure alone. Which, I mean, can work very well if you know what you're doing, but it requires a lot of practice. We're not going to do that as beginners or even intermediate traders. So what do we need to see to validate this up candle here as a supply zone? Well, we need to have some sort of break. So I don't see a break, meaning that we haven't quite taken this low. We only wicked out that low. So that doesn't count. This is not a valid bearish break of structure. Hopefully you guys caught that sooner than I mentioned it. And that is an unconfirmed daily supply zone. So I'm not going to bother with that. Okay, we're not going to bother with that. And we know that if we had a broken structure here, not only would this have been a valid pivot-based or fractal-based supply zone, this entire area here from left to right where the boss actually occurred or the break in structure actually occurred would also be range supply. But look how big that is. That's irresponsible to use something that big in this regard, right? Because honestly, you'd have to get like a $10,000 move for that to be worth your while. So we're not going to go ahead and do that. So let's go ahead and work our way down. These are the time frames that I highly recommend that you guys stick to. I know I mentioned this previously, but you should always use my time frames that you have here if you have Premium Trading View. I do not use anything other than what's shown here, okay? So I'll start from the daily and I'll work my way down. Okay, I'm on the 18-hour time frame now. Interesting. So on the 18-hour time frame, you could argue that from the top down, there's a different structure drawing, and it's down, it's up, and it's down again, and you actually have broken structure here. Okay, that's fine. You could argue that, whereas the last up candle is your fractal supply zone. So we will mark that in just for now, but we may change that later on. We're going to leave that guy in. So we know that following a break, what is likely to happen? A mitigation based on RMC. Mitigation, and then a range, and then initiation, mitigation, continuation, range, initiation, mitigation, continuation, blah, 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 so on and so forth. And if you didn't watch that just yet, you can obviously watch that in the market structure series. So what we see here is we have a supply zone's created. But do we have anything for demand? Well, we did, but we already mitigated that zone, or at least from what we can tell. So let's find that demand zone, shall we? Well, I can tell you that demand is created when you have a sell to buy, and all you need is that V shape with a line across, almost like a check mark with a line across to validate a possible demand zone. And if it has one candle inside of it of the opposite color, then we know it's a valid order block with imbalance. So in this case here, we have a pivot point, we have a pivot point, a pivot point, a pivot point, and then further a pivot point, where if you connect these dots, you went down, up, break. So even though it's not really what you call a swing break of structure, it's still an internal break of structure. And as long as you break some sort of structure, then it is a valid zone. So this is some sort of structure. It's internal, but it's still valid. The primary structure at the time was up, down. Technically, that's not a break, but it still had to mark it in. And then you went like this, and then you finally broke structure here if you staircased it, right? So in that regard, it's not necessarily the last down candle before that last up move. If you had a staircase your break of structure line, it would have been this guy right here. So this wasn't necessarily valid at the time, but it was from an internal standpoint. So internally speaking, he was valid. That's what we want to see. We want to say, okay, as long as he's valid in some way, shape, or form, we can use this guy going forward if it has not already produced a move. But unfortunately for us, if you draw the rectangle around this guy, he was already hit. He was tagged right here prior to the move up itself. Although quite slight, it is still a validated zone. Whenever you have even a local break of structure from a supply or demand zone, whether it be fractal or not, when you break structure pulling away from that zone, and it actually broke structure here pulling away from that zone, it invalidates that zone from further use, unless, with one exception, there is another zone within that zone that you're just not seeing that has not been tagged by this wick here or this wick over here. That's the only exception. We don't know that yet. We're still working our way down. So we have a solid looking supply zone that we could be shorting if price makes its way back up again. And we have a demand zone that has been tagged. They're both order blocks with imbalance. They both have one candle of the opposite color contained within. So let's go down to the 12-hour. Now on the 12-hour, it's the same. It's a little bit tinier, but it has been hit over here nonetheless. So it has been hit again, and we missed that tag anyway. So we can't really justify that. What about 8-hour? 8-hour, no. 6-hour, and I'll work my way down. I'll slowly work my way down through my time frames until I see what I want to see. So 4-hour, okay. So there's really not a whole lot there, even on the 4-hour, unfortunately. Okay, 3-hour. Okay, so I'm probably going to be at somebody, I guarantee you somebody in this audience right now, if they're watching this course video, they would say, okay, what about this guy right here? So there is such a thing as over refining. I preferably would keep no more than 2. I wouldn't go any further than 2 with this, like 2 supply zones on top of one another. I wouldn't have like on the 5-minute, another box here, on the 1 minute, another box right over here. I don't do that. Okay. That's silly because we're watching for confirmations anyways. The bigger the zone, as long as it's valid, the better it is. Not necessarily the tinier the better because you're getting too refined. Unless you're trusting these order blocks or these supply and demand zones with limit orders, then the bigger is better. Absolutely better. All right. So I'm actually going to drag this guy over here to see if it actually hits this fractal zone under us. So I'm going to use my magnet tool. Actually, I'm going to use a horizontal line. I'm going to drag this guy up and I'm trying to match it up over here. Look, I want to match it to the bottom of this candle here. So I'm going to take drag my cursor over that. So as you can see, we can actually pull this guy down to this candle here. There is a candle that was left unmitigated. It has one candle of the opposite color contained within. We're on the 3-hour time frame. It was not hit here on the sell to buy where you got the break of structure. Even though it's not the last down candle, it's still a valid order block with imbalance. This would be what we call the decisional point. And this would be the extreme point, demand zone of the move. You have inducement on this candle because this was actually front run on the 3-hour time frame. That's another check mark. You got the order block with imbalance, check. Inducement, check. Was it a flip zone? Well, that's really hard to tell on the 3-hour. We might have to change time frames to really see if it was a flip zone or not. Okay, let's go down to the 1 hour. And we're going to work our way over. Okay. So if you look very closely here, you might see something. So technically speaking, we know that wicks can represent flip zones. Now, I usually don't use wicks when I'm looking for a tradable lower time frame flip zone, but because we're on the higher time frames, we know that these wicks are always supply and demand zones if they have not been mitigated. In this case, it has not been mitigated. So we wicked into it, right? So we went down, we came up into supply. Now look what happens here. Even though supply put in a lower low with the wick, it did not close below. So this is a valid flip zone. So the job of this supply was to take out this low and this low. It only took out one of the lows and it didn't close below it. So the job of supply failed. And as you can see, you have the aggressive sell to buy following that move with the local break of structure here, a local break here, and a local break over here. So you had many local breaks that occurred following that sell to buy. You also have a big old imbalance candle, which we're well aware of because it's an order block with imbalance. So this is an extra check. We can add another check mark to this point of interest. Okay, I like this so far. So we have 3 checks. The inducement, check 1. The order block with imbalance, check 2. The flip zone, check 3. Did it grab any local liquidity during the order block's creation? Well, technically yes, because it took this internal liquidity right here. So we can add another check mark to this. Okay, so we have 4 checks on this point of interest. That's very, very good. We can do that with this guy, and we can go up to the upper zone here, and we can try to do the same thing. There's no inducement on this zone. This was the bigger 18-hour zone, and this was the 3-hour zone contained within. Right? So there is no inducement, meaning that this wick didn't come high enough. You want it at least relatively close to the supply zone. You can't call this inducement, right? Because it didn't come close enough to say it's a front run of supply. That's all inducement is. It's just a front run of the zone. This is definitely not a front run of the zone. However, following supply's creation, you could argue that we had a very aggressive pull away. And we know it's an order block with imbalance nonetheless, so it still gets 1 check mark right off the hop. Does it deserve another check mark? I mean, yeah, I would say so. Why? Well, because we have the primary shift in swing structure that occurred because of this area. It was also a potential Wyckoff model because it has that rounded figure. Without even understanding how Wyckoff works, if you see rounded tops and rounded bottoms, strong possibility it's a Wyckoff. Although not really a key criteria in the series for a stronger zone, it's still another thing you can look at, right? So in this case here, we have a solid break of structure using swing market structure on a higher time frame. This is our 3-4 hour structure, up, down, up. It broke down, lower high, and then it broke down further, lower low. That's excellent because it broke not only internal structure like this guy did, it broke swing structure. Swing structure deserves 2 check marks rather than 1 using internal structure. So it's almost leveling itself out in terms of check marks compared to the demand zone. It's an order block with imbalance. Okay, there's another check. Okay, we don't really have a flip zone that we can see, but we can go to a lower time frame and check. Let's go to the 1 hour again. All right, let's see how this presented itself. So technically speaking, you could argue there may have been demand within that lower wick there, but I'm just not a big fan of using that one. There is another option that we could look at if there's something remaining on an even lower time frame in this wick. So it may not be a flip zone after all. It could be, but it may not be. We're going to find out here in just a moment. Let's go to the 10. All right. So it actually would be a flip zone. And the reason why it's a flip zone is because you have demand. This was a valid order block with imbalance, okay? Demand's job was to put in a higher high, whether it be this local internal structure for a higher high, breaking that, or whether it be breaking this high or this high. It doesn't matter. Its job was to do at least one of those ideas. Either this high, or this high. Did it do any of the following? No, it did not. So the job of demand has failed, dramatically failed. So in saying that, because you had that failure of demand, which supply caused the failure? Well, technically the entire zone has, but ultimately you could refine it down. I'm not a big fan of refining this down any further. Again, I'll tell you why. Because it didn't actually take the high over here. If we had taken out this initial high, then it would have been a proper looking transition in structure, and I would have felt a lot better with this move. I would have no problem using the regular supply to demand, demand to supply flip scenario. But I do not feel comfortable refining it any further just because of that. We're going to keep it basic, simple. This is indeed a flip of some kind. So demand failed, supply took its place, aggressive move to follow. Is it a valid POI? Absolutely. We have another check mark here. So we'll add another check mark. Okay, we'll go back to the 3 hour. We got 4 checks on this zone and we have 4 checks on this zone. Excellent. So this is a way to validate our points of interest. Now, again, are we going to limit order these zones? No, we're not. We would use them and we would go down to lower time frames, investigate how price comes into these zones. There's many different things we're going to do, and we're going to apply everything in this course to make sure that we're doing things correctly, right? Like, do we come down with a market structure shift? Do we come down building up liquidity in a curvature sense or a trend line sense? Is there a reason to come back up? Do we come down nice and slowly and then make a move where you get that nice sell to buy, very aggressive one nearing the range low? Is it a range deviation? Is it a Wyckoff accumulation into this demand zone? There are many different things, right? But for basic POI selection, we don't need to worry about that until price actually gets there. So this is where we would set our limit orders. Kidding. I hope you guys didn't really believe that. So this is where we would set our alerts, right? This is where we would set our alerts. No limit orders. No to limit orders. Say no. I'm going to make t-shirts. Say no to limit orders, right? We don't go with limit orders. The only way you should ever be limit ordering in any market is if it's a nice supply to demand flip that meets all your criteria inside a zone just like this that has more than 3 check marks, okay? A nice flip, a nice transition of structure with a flip. That's the only way I'll ever set a limit order that's not a take profit, okay? So guess what? We set the alerts, as I mentioned. Okay, alert number 1, bang. Alert number 2, maybe do it a little bit closer than that. Maybe even right here, right? Then we'd watch to see what happens. Let's see what happens here. Do we get a move into this zone? Oh, we did. We got a nice sell into that zone. And then we had the, ooh, wow, look at that buy. Ooh, phew, that was a crazy one, right? That was actually way more impressive than I thought it was going to be. So that was an excellent zone. The 4 check marks, it wore those check marks really well. I'm proud of you, demand. You did really well there. And were you really hard to find? No, you were not. We didn't even have to go lower than the 3 hour time frame besides the 1 hour for just a few seconds to see the flip. But besides that, in terms of every other criteria, we didn't really have to drop that far down, did we? Right? Did you see me using the 1? Did you see me using the 10 minute, the 15 minute down here? No, we didn't have to. Yeah, we did up here. We used the 10 because we wanted to see if there was a flip. But did you really need the flip? No, not really. The swing structure breaking should have answered that for you, right? Because logically, you had enough criteria right then and there. Is it always wiser to watch your market structure coming into one of these zones? Heck yeah, right? Of course it is. Way wiser. So in this case here, again, we're not going to limit order. We're going to just watch the alert. The alert was tagged, and we're going to wait to see how price reacts, blah, blah, blah. Ooh, holy smokes. Okay, that really got smoked there. So price came down. Now, what did price come down to? Well, it came down into yet another zone. So if you had a look closer here, you would see that this was indeed another demand zone. I'll use green for this one. Well, price went right to the bottom of it, though, in this case. And this wasn't really a hefty, really nice looking demand zone, I'll be honest. And the reason why it's not very nice looking is because it didn't take any liquidity. I can tell you without going down to a super low time frame, there was no flip. It wasn't a really nice looking flip, even if there was one. And the structure itself is contained within this point and this point. So your structure was down, up, down, and then all happened right in here in the middle of that high, in the middle of this lower low. Not a big fan of that. If it had been incorporated more over here, using those main pivot points, like the main internal structure and not contained within, and that's where you had, the nice buy right away, no messing around, just a quick buy, and you had this demand being formed right here, that's a different story, right? That's way better. If it farts around in the middle of a zone, I'm always more skeptical with those because generally they don't meet all the criteria that you're looking for. Now, sometimes they will, but in this case, it did not. But either way, you might get a good reaction off that zone. I don't know. Let's find out. You actually have. You got a pretty decent reaction off that zone. You got a retest off that upper supply zone one more time, it looks like. And ultimately, price decided to make its way lower. Okay, because again, why? Because we had a shift in structure, which is kind of besides the point of the lesson here. The lesson is to show you guys how we go about POI selection. All right. So we know there's pivot created zones. We know there are range created zones. We know we have buy to sells and sell to buys, and that's how these fractal zones are created. That's how these range zones are created. We know we have a decisional point and extreme point moves, even in one single break of structure. We have inducement. We have basically, supply and demand chains. We have liquidity purges or sweeps to make a move stronger. We have order blocks with imbalance. We have how aggressive the move was itself following the demand or supply's creation. We can also use fixed ranges for extra confluence on our supply and demand zones. There's many different things we can put together, but what you'll see is there are many different ways that we can stack these confluences for our points of interest, right? We don't have to only use high time frame zones. You can use any zone, but remember, the bigger is always better if the option is there. And from there, you're going to refine down once price gets in that zone. Once your alert goes off, you're going to look for that before you get involved, right? And this is the involvement here, right? You're waiting for the key criteria of the structural change. You're seeing the evidence of it working, your point of interest working before getting involved. Now, it's going to leave you sometimes wondering why you didn't just trust the order block or the demand zone, just like over here, right? I bet you there was no structural change coming into this zone. At least if there was, it was pretty high up. So if this is your zone here, look at the 3-minute time frame. On the 3-minute time frame, you had down, up, and down. Sure, it broke structure, but you're waiting quite a while for it to break structure, right? The move already pumped up from that top of the order block to here. It was already $800. So sucks sometimes, right? But you're patient. You got to be patient with this stuff. You're not going to hit every single one. So what do you do in a situation like that, right? You got to ask yourself, what do I do if I hit my point of interest and it's a high confluence zone or it's a low confluence zone? Doesn't matter. It's besides the point. And we end up getting a structured transition, but it's so far away. Well, just follow the freaking chain. Start your new POI selection. Okay, here's a POI. Here's a POI. They're both the valid demand zones. This is the decisional point. This is the extreme point of this one particular move. Okay, cool. Did they do anything? Blah, blah, blah. Stack your confluences, yada, yada, yada. And from there, that's how you'd go about it. What's your market structure saying? Would you break structure bearishly to come into here? If so, are you going to wait for another bullish transition coming into that zone? There's many different things, right? But if you apply everything together and watch my videos, you should have a very good time with this.